to the budget speech tabled in Parliament yesterday. Finance Minister Tito Mboweni's budget being largely welcomed, but there has been mixed reaction from political parties and from the markets as well. There are still concerns about the country's debt trajectory, low economic growth and the largest tax shortfall on record. The big question now, whether government will reach its debt targets and implement its structural reforms. Our business editor, Xolani Mbanjwa, joins us now live. He's still in Cape Town for us this morning. Xolani, it's great to have you with us on the show. I think perhaps let's begin here in terms of reaction to Tito Mboweni's budget speech yesterday. How did the markets react overall?
Good morning, Michelle. Well, it was such a very good reaction. It was positive all around, with the markets actually looking at the bond yields stabilizing, and the fact that over the next 3 years, government is actually expected to issue fewer bonds, which means that they actually intend to borrow less from local markets and international markets. But looking also to the rand strengthened by at least 14 cents to the US dollar, during that particular budget speech, after some concerns about, the days in the run-up to that budget speech. Of course, the good news coming from Tito Mboweni is that when it comes to the debt trajectory, they want to stabilize it at 88.9% in the year 2025-2026. And of course, when you look at that, economic growth projections, we were expecting that 2020 would see a contraction of 8%, economic growth, but it's now at 7.2% a contraction when it comes to that particular year. 3.3% growth this year, 2.2% growth next year, 1.6% in the following year, better than expected and quite positive from a market perspective, which is slightly why, Michelle, some of the political parties said, and unions said that this budget speech was in fact a budget speech that was talking to investors to appease the markets and business, not really to do to make a dent on unemployment, inequality and poverty in the country.
Yeah, I mean, the big criticism coming from political parties is that this budget really did nothing for the poor in South Africa, Xolani. Let's take a look at some of those key highlights, or I suppose people will call it the lowest points of the budget. Really concerns about the negative growth in grants, only 30 Rand extra for pensioners, for war veterans and for those disability grant recipients.
No, absolutely, Michelle. If you look at the overall growth in grants over years, this is negative when you look at what Tito Mboweni has proposed for the next 3 years, that this will be negative growth, at least, low when it comes to low income, segment, it will be negative when it, compared to all the other years. Although he did announce, Michelle, that there would be those increases. There's been a concern that those increases are just too light, and it actually, a budget cut for that expenditure when it comes to foster care grants, pensions, and child grants, a cut of 5.8 billion rands. And the question from political parties has been whether this is the best thing to do by the finance minister at a time where most households and in fact the poorest of the poor and most vulnerable are still actually feeling the impact of the COVID-19 pandemic. And these particular cuts, however, have made some investors and some ratings agencies and the local markets quite happy, because it is keeping in line with what the minister rather promised last year in making sure that they actually consolidate when it comes to their spending. But Michelle, most importantly, when it comes to this austerity, Tito Mboweni is saying that this is not an austerity budget, but there are massive cuts when it comes to services and some departments that are in the front line of service delivery, and which is a huge worry.
Yeah, absolutely. The overcollection of that 100 billion rand in tax for this year also as well coming as a big relief?
A massive relief. It was unexpected at 100 billion rands, and that actually made it possible for the finance minister to actually cancel that 40 billion rand in personal income tax increases that were announced last year over for the next 3 years. Something that is quite good, giving also back, Michelle, 2.2 billion rands for certain segments of the lower and middle income, taxpayers by giving them that 2.2 billion rand relief. But we are still seeing a huge shortfall, the biggest shortfall when it comes to tax collection. But the good thing about it this time around, if the finance minister keeps to his promises for economic reform, to show up economic growth and spare spending, we are likely to see that my apologies. We are likely to see that there will be.
Xolani, let me come in there, and then you can grab a glass of water in the meantime. I think we've all been talking just a little too much as we've been analysing the budget speech and all the big developing stories. One of the other issues that you also talked about was, the budget framework as well being welcomed by credit ratings agencies. They've previously also expressed doubt, as you've explained to us, of a government's resolved to cutting spending, and they've indicated that they would be watching quite closely. You touched on it just a little earlier, Xolani, but did credit ratings agencies come out with any kind of statement, particularly on the issue of cutting spending?
My apologies for that, Michelle. Well, one ratings agency did actually comment and said that it is something that is still to be seen whether we can actually introduce the economic reforms that are now 4 years old that we had to, we have failed in the past 4 years to actually introduce something that is a blot in the history of the past 4 years where we have not introduced these reforms. So, and that is pegged on what Tito Mboweni does, not only himself, but cabinet as well. It's something that is quite serious, and this budget is almost written in pencil if we actually do not introduce those reforms to make sure that we spur economic growth. The one good thing, however, that there has been seen by investors who have issued their commentary when it comes to this budget is the fact that we are actually seeing a reduction in corporate taxes from 28% to 27%, and the promise to actually make sure that business investments are actually protected through Operation Vulindlela to fast-track any applications that a big business has when they make investment in the country. That has been largely welcomed by investors and at least by one rating agency. But we are speaking to Fitch later on today at 11, and they were going to give us their a take on this particular budget.
I'm going to ask you to spend part of your budget there in Cape Town on some ginger tea for your throat. You've got some talking coming up as well throughout the day today, in fact, because the Finance Minister will be addressing Parliament's joint committees today as well on the budget. Very, very quickly, sparing your throat, tell us what we can expect.
We can expect Tito Mboweni to be grilled this afternoon. He is before the joint committees, all the select and joint committees on finance and appropriations, and he's going to spend a few hours being grilled about the decisions and the choices he made for this budget, and the fact that, we are still, Michelle, in the throes of COVID-19, and a lot depends on whether we are going to face a third wave or not.
Yeah, absolutely. Xolani Mbanjwa, thanks very much for that update. He's live to us there from Cape Town as we continue to bring you analysis on the budget speech.